Hey, this is Simon with Trade and Perform Coaching. Wanted to go through today and let everyone know, kind of do it. Actually, it's a trade review for the members in the room, but really for the general public. So a quick bit of background. I have not been doing trade reviews on a regular basis. And what we're going to be discussing today is CL. I trade NQCL, ES, and gold. What we're looking for, just to be clear, the primary objective is day trading. Right, during pit session hours for the most part is when I'm awake and trading, and the goal is, well, how can we pull money out with as close to general pinpoint accuracy for entry and then manage exits as we're trading. So first, let's take a look at the big picture. These are the levels I had for CL today. I always start off of a volume profile, right? And what you can see here, if I can pull up my CL profile, which is right here, this is where we started the day. So, number one, the blue area is what's called value area. It's the prior day's value area. It's where the most amount of time and volume was spent in the prior session. And that was hanging over our heads all day long. As you can see, we've been in quite a substantial downtrend for a couple of weeks now. We basically just killed everyone on that gap up to 64 and immediately wiped it down to the low of 49, 41, 49.60, somewhere in that neighborhood, right? So two things I had coming into the day as I prepared. Number one, I think there's a lot of shorts. We've been really rolling over at the end of the day. I think there's been a lot of shorts trying to gun and break that 50 level. We're already down a lot. And while it is a single point commodity, meaning it's not an index where there's hundreds of different inputs to calculate the price, it's a single product based on the most recent information. You still end up getting an overwhelming number of people trying to short. And up to this point, by the way, they've been successful, right? But that train runs out. In order to go up, however, we had to get above the profile. That being said, what I was looking for today, so that gives me the general picture, right? We're in a downtrend. We've started a consolidation phase since the 3rd, right? We're building energy for a move either up or down. And my guess would be the next logical move would be a surprise to the upside. Obviously, if we break the 49.40, there's considerable room to the downside, but there's a lot that needs to be tested to the upside. So let's go to the algo. The idea in the room is, first of all, we get a good idea of what's going on in the background for the day, and then we come in, and instead of having a pre-laid out plan where it's absolutely long or it's absolutely short, we sit down and we look at where the algo is telling us where late traders are buying and selling. So there's a couple of points of interest. The RSI is just for general guidance. I do not trade based on RSI. I trade based off these little signals that my algorithm generates. And there's multiple ways to trade off that algorithm. This is one specific way. In the middle there is what you see is a basically it's called a zigzag, but it goes back to Wyckoff waves. And what that middle area, this area here, I'll put an arrow on it. What this is measuring is general buy pressure. Well, if I can get my machine to work. General buy pressure and sell pressure. And that's my lovely wife calling. So give me just 1 second. Let me talk to her and I'll be right back. So I apologize for the interruption. Continuing on the idea. So what we're looking for is we're trading order flow, right? So we have a general idea of where support and resistance are from the day time frame charts, from the support resistance levels that I post to the members, right? And by the way, there's never any pressure to join the room. This is just discussing how we read order flow and how you can improve on just basically looking at trade location. We feel like you just need more information to make good trading decisions, right? And so what gives us that information is two things, both the Wyckoff waves, the RSI, and mainly what the algo signals are generating. And no, I do not disclose what the algos are technically defined at, because I worked a really long time to figure those out, and why the heck would I tell anybody? However, I can tell them what they, in a general way, what they mean. And if you want to go down the rabbit hole I went down for multiple years, be my guest. So at any rate, long story short, what we are looking for is, so see here, or there's two examples. See when we get oversold, the RSI is oversold here, right? Let's forget about, I'm not going to do a lesson on Wyckoff in general, but the RSI is oversold, and you'll see right here, I'm going to make this really big. Those arrows right there at the bottom, you don't always get them at the bottom, but when they do, see these arrows are telling me that there is an enormous amount of volume and energy being put into those bars. You can see the push here at the bottom is smaller than the largest push to the downside. And what happens is when you get up over those arrows, right? So the flag adds even more information, tells me there's even more energy than I thought previously, right? And so what I'm looking for is now is I'm oversold. I know they spent a lot of energy trying to push lower while the market was oversold. Above those bars, which occurs right here. And now I'm looking for the backside test with a stop 1 or 2 ticks below here, right? And if you expand this and you look carefully, you'll see that even though no, it did not give you the low, what it did do, right? So if we make this really big, we'll spread it out. And you can see that once we saw that we had trap sellers right here at the bottom, if you took the backside test, I'll put a line right on top of these. Line right below the low. Backside test came right to 50.52. And yes, it did not rocket ship to the upside yet. It wasn't ready yet, right? However, it moves from 50.52 to 50.74. And 20 cents, $200 a contract, is usually plenty of money for most traders, right? That gives you the ability, if you put on multiple contracts, to take the risk off because your risk was 50.52 to basically 50.52. You had a dime, so it provided a 2-to-1 risk reward, right? It gave you a clear picture of where you were trying to get in on the trade, right? And it gave you an opportunity to get a stretch. And from there, it's up to each individual trader. Every trader manages that trade differently. Some try to push, some go like Randy. Go, hey, 10 and 20 cents is great for me. I can make a living doing that all day long. And they take the 10 and 20 cents, right? So then roll right through the day, right? That was at 8 o'clock. That's right near pit open. That's always a difficult trade, right? But if you look, we get set up yet again. So look right at 8:30. You can see again, RSI oversold, right? You can see again that we pushed to the low. But again, it comes on decreasing volume. That's what the Weiss wave is telling me, is that there's decreased participation to the downside on this push, right? And there again, right at the bottom, I get a flag. I get an arrow down. I know that there's a ton of effort put into that bar. So I'm looking for this little yellow line. See this arrow up, little yellow line. Bar clearly closes above. Okay, guys, so remember, bar closes above, POC above. Backside test, right, close above, backside test, and for the long. That was right at 8:40, and that particular trade rolls all the way up. Now watch the third trade that's going to come up, right? So you see here now, we are in overbought territory, right? So what do you do with that? Well, 2 things if you're me. Number 1, I do not, overall, when I came into the day, I'm not pressing shorts, right? Why? Because we're so far oversold and the short has become so easy. I think shorts are going to end up trapping them. And as of now, as I'm doing this video, it's at 2:30 in the afternoon. CL's trading at 51.09. I thought the long side was easier to press to the short side. It does not mean that there weren't shorts available. It just means I thought that was the easier trade to press, right? So if you look when we get overbought, we have 2 candidates potentially that could set up shorts if that was an area you were looking for the short side setup on. So come right over here. You can see that ultimately it would have failed. However, you get push 1, and then you get push 2, right? I'm not interested in the downside pushes necessarily for this particular setup because I know when the market's rolling up that we're going to get downside pushes. So naturally, you're going to have people who are long selling as it's going up, sometimes in large quantities, and that's going to make the algo trigger. It doesn't tell me nearly as much energy as when people try to push to the upside as we're moving up. So we finally close underneath right here. Your stop would go either here or here. So let's look at what the RR would have been. I did not take this short. So let's use the larger stop and just so we can see what it was. So the bottom of this bar would have been 50.73, 50.83, so you have an 11-cent stop. If you shorted the 50.72 on the backside test, the best you could have done would have been 50.57 from 50.72. So that's 72.62, about 15 cents. You're about a 1-to-1 risk reward, and that's the best you could have done there. Again, I didn't take the short because I didn't think it was short at that point. I was really looking for backside test key areas to set up for longs. That's what I wanted. And that worked there. It bit me over here, right? Because while it didn't set up short, according to the way it set up short right here, right? And I hesitated. See how we have this little yellow line right underneath. You can barely see it, but it's there, right? It closed underneath our shift up bar. The risk on this trade for me would have been up to the top of this, or the top of the bar with a little triangle on it. So that would have been 50.98 to 51.11, or 13 cents, 14 cents rounding error. And you clearly would have gotten your P&L off of that. It did occur on divergence within the RSI. That was probably a good setup, and I skipped on it, and I left a pretty nice chunk of change on it. However, the point isn't whether I took the trade or didn't take the trade, right? Because there's multiple traders in the room. Most of the guys that are in the room are experienced, and they're looking for additional edge to improve their trading, right, to get to profitability. So if you look back on the downside when we're coming back in, you'll see over here, we finally get oversold right here. And again, I said this would be a short video, and it is going to be short. There's the oversold, right? And there's the push. There's my push down right at the bottom. Now this got a little tricky on the trade because it just took off right from there at 9.56. What you want, okay, so see this bar, how this little yellow line is not above, right? So what we wanted was either this one, but see this where you have two triangles and there's a star here and two triangles. And they really tried really hard to press down here. So this bar is the first close above, and I wanted it to backside test that bar. So guys, there's two ways to take that trade, as I discussed this morning in the room. You can take half of it when it closes above and the other half on the backside test so that you don't miss it. I'd say about 70% of the time you get the backside test, and whichever strategy you follow in your trading, it doesn't matter, right? Just don't get bent out of shape if it doesn't give you the backside test. That one took off. I would have gladly taken on a backside test that didn't give it, right? And then if you look over here, back when we came back on top, right? And this is right at 10:30. And you can see there just was no shift. There's no up arrow anywhere near the top. What is interesting about this is when we do get overbought, right, on the RSI, this is my last shift up. Let me erase the lines here real quick. The methodology still worked for entry. Again, I was still looking for a long, so I wasn't taking this. But here is the bar we got behind, and you can see right there, the algo led you to two really beautiful shorts if you were willing to take the short. I wasn't. I was wrong. That's that. And then the last thing I saw today is if you roll back over here, see this star that got produced here, here, this arrow down, another arrow down. They're just pumping a ton of energy basically right through here to try to get it lower. And what you'll see is, so I will use the Wyckoff waves here. You see it pushed, they pushed again, and they come down there and they make the biggest of the three pushes, and they can't break the low. See how they pierced right behind this bar right here, and then trap back in. And as soon as we were above these three bars, I thought it was long. Right here, you had to be willing to risk the volatility that goes on at the 1:30 close, pit session close. However, I thought that was a very good trade, worthy of taking, and that would have given you a rotation from 50.76 eventually all the way back to 51.16 for 30 cents. So that's kind of how the day cracked out. Again, there's multiple different entries depending on your aggressiveness. I think this particular methodology of entry has the least amount of risk to it, and is the easiest one of all the methodologies to follow using the algorithms. Again, what the algorithms are doing are telling us where there's a lot of energy expanded, and once we get on top of those bars, we know that there's the opportunity to capture some pretty large trades once they get above them. We happen to be in a balanced day today, so there wasn't that much range. So you had to be, 10 to 30 cents was available certainly, but that was about it. Trying to think if there's anything else to say, guys. There really isn't. Obviously, it works in NQ, it works in ES. The PA changed, guys, just in general from last week to this week, when a lot more, once everyone kind of got more sure that the that virus that's going around China isn't going to apparently is not going to have any economic impact on any other market except the oil market, and the market's price behavior and patterns changed, and the big fat huge rotations were no longer available. But that's all right. There's still plenty of money to be made. So anyway, long story short, my name is Simon. I'm with Trade and Perform Coaching. The email is tradenperform @gmail.com. If you have any questions, if you'd like a 5-day pass into the room, trying to think of anything else I could have put in there. Oh yeah, it's just so no one freaks out. The price of the room is $195, including the software, so you can have it on your desk. It's on CR Chart, but as long as you're a member of the room, you get the software right there on your desktop. And I do one-to-one coaching on request if our personalities match up. So, and anyone can ask for a 5-day pass into the room to check it out. Anyways, I hope y'all find this helpful. Have a wonderful day. Remember, don't follow anyone blindly. Edge is hard to find. We feel this is an exceptional edge, and it makes a lot of money, and that's really, really cool. Anyways, have a great night, guys. I am out of here. It's 2:30 in the afternoon, and tomorrow's non-farm payrolls. So let's see if we can have a little fun tomorrow. I'll talk to you later, guys. Good night.